$680 million poured into precision ag last year. Autonomous weeding robots dominated, and John Deere made 2 acquisitions in 3 months. A food company, not an equipment maker, bought a robotics startup to protect its own supply chain. The deals are accelerating, the money is moving, and the winners are already separating from the pack. If you're investing, building, or buying in this space, you need the full picture before your competitors get it. The 2025 Precision Agriculture Intelligence Report from iGrowNews is now available. Get your copy today at igrownews.com/precision.
Quick recap from last week. We did the H1 check, and the data showed $1.27 billion across 89 deals, robotics leading on capital, and partnerships doing more deal flow work than funding rounds. Bayer received EU authorization for Lasso, the first new herbicide active ingredient approved in Europe in over 15 years. Pivot Bio's Proven 40 cleared EPA registration, the first biological nitrogen product at a 40 pounds per acre rate. John Deere's See and Spray crossed 1 million commercial acres. And we flagged the WFFS strawberry virus spreading through 28 U.S. states with no curative treatment, worth keeping an eye on heading into the summer. Now, this week's episode. Welcome to another episode of AgTech Digest, your go-to source for the latest in agricultural technology. This week, tariffs are front and center. We'll look at what steel, aluminum, and semiconductor duties are actually doing to AgTech hardware costs and supply chains, and who's been positioned well enough to absorb the pressure. We'll also get into a week of sharply contrasting earnings reports, 3 company exits that each tell a different story about where the sector is today, a pest monitoring platform acquiring the sensor hardware it was missing, digital grain and AI agronomy tools going live at scale, and a 180-year soil carbon dataset from the UK that has some uncomfortable implications for net zero targets. There's a lot to cover, so let's get started. Let's take a look at what this week brings us. 3 company exits, 4 earnings reports moving in completely different directions, and a tariff analysis that explains a lot about why hardware-heavy ag tech is under pressure right now. The sector isn't in crisis, but the cost structures that made sense 2 years ago are being stress-tested, and the companies that saw this coming are pulling ahead of those that didn't. Looking at this week's analysis, it covers the tariff impact on ag tech. The current U.S. tariff environment, spanning steel at 25%, aluminum at 25%, and semiconductors at rates ranging from 15% to over 50% depending on origin, is adding 8 to 23% to the landed cost of agricultural hardware across robotics, precision irrigation, drone systems, and greenhouse technology. The companies hit hardest are those that built supply chains assuming stable global trade, sourcing steel fabrication from Southeast Asia, electronics from China, and sensors from European suppliers. The companies absorbing the pressure best are those that localized manufacturing before the tariff cycle began, either through domestic U.S. production, nearshoring to Mexico, or securing long-term supply contracts with non-tariffed sources. There's also a second-order effect worth noting. The tariff uncertainty itself is delaying purchasing decisions on major equipment. Farmers and greenhouse operators are holding back on capital expenditures, waiting to see whether rates stabilize, which is compressing the 2026 commercial pipeline for hardware companies even beyond the direct cost impact. The companies positioned to gain from this are those offering software and subscription services, asset-light models that benefit when hardware spending freezes, because they offer the operational improvements without the capex commitment. What's in the news for us? Well, earnings week gave us a clear split. Corteva reported strong Q2 results, with seed revenue up 9% and crop protection up 7% on a constant currency basis, driven by herbicide volume gains in Latin America and strong soybean trait penetration in North America. Nutrien raised its full-year potash volume guidance to between 14.2 and 14.8 million tons, citing strong global demand and a competitive Canadian cost position. On the other side, AGCO reported a Q2 net sales decline of 18% year-on-year, attributed to North American dealer destocking and lower European demand, a signal that the equipment cycle has not yet turned despite improving farm income. Deere reaffirmed its FY 2026 net income guidance of $4.5 to $5 billion, flagging continued demand softness in large agriculture while calling out growth in its technology and services revenue line. On the exit side, three separate stories, three very different dynamics. AppHarvest's remaining assets were acquired by AppTech Group through a court-supervised sale, marking the end of one of the most prominent names in U.S. vertical farming after the company filed for bankruptcy in 2023. Benson Hill formally began its wind-down process after an extended period of exploring strategic alternatives, including a failed merger attempt, concluding that no viable path to standalone commercial viability existed. And Invaio Sciences, the peptide crop protection company backed by Ginkgo Bioworks, closed operations, notable because Invaio had generated genuine scientific interest and had a partnership pipeline, but could not bridge the gap to commercial revenue at the pace its capital structure required. In M&A, Semios acquired Pessl Instruments, the Austrian manufacturer of the iMetos weather station and soil sensor platform. The deal closes a meaningful gap for Semios. It gives the pest and disease monitoring company its own environmental sensor hardware, rather than relying on third-party integrations, creating a more complete closed-loop monitoring and intervention system. Trimble completed its internal restructuring of the agriculture division into a standalone business unit, separating it operationally from its geospatial and construction divisions. The move is consistent with Trimble's strategy of creating cleaner segment reporting ahead of potential further portfolio decisions. In digital agriculture, CBH Group, Australia's largest grain cooperative, launched its digital grain platform across Western Australia, giving growers real-time visibility into grain receival, storage, and payment status across CBH's 200-plus receival points. Winfield United launched an AI-powered agronomic advisory tool for its network of independent retailers, built on field and environmental data to generate tailored agronomic recommendations at the retailer-grower level. In sustainability, Yara and CF Industries signed a green ammonia offtake agreement, with CF supplying low-carbon ammonia from its Blue Point facility in Louisiana to Yara for distribution across its North American network. Nufarm and Corteva expanded their omega-3 canola commercial partnership, extending Nufarm's Nutriterra DHA canola oil program into Australian and Canadian markets through the 2027 growing season. Also this week, AeroFarms, now under Palm Ventures ownership, opened a new commercial vertical farm in Newark, New Jersey, its first new facility under the reconstituted company. Cropway raised €1.3 million in pre-seed funding for AI-powered crop input optimization in the EU market. And the UNFAO released its July Food Price Index, showing a 1.2% month-on-month increase driven by vegetable oils and sugar, partially offset by falling cereal prices. On research, and this one deserves attention, Rothamsted Research published findings from its 180-year long-term agricultural dataset, showing that soil organic carbon in UK arable fields has declined at an average rate of 0.17% per year since the 1980s, despite organic matter additions in many fields. The implication is significant. Maintaining soil carbon in intensively managed arable systems may require more targeted intervention than current practice delivers, and the gap between what soil carbon accounting models assume and what field data shows is real. That has direct implications for nature-based carbon credit schemes and national net zero commitments that rely on agricultural soil carbon sequestration as a meaningful offset. Finally, to close our news, on appointments. Indigo Ag named Sarah Dillard as Chief People Officer as the company continues integrating into the Tyrian structure. EFC Biosciences appointed Dr. Marcus Wright as VP of Product Development, and Ag Growth International named Erica Anderson as Chief Marketing Officer, its first standalone CMO appointment. Looking ahead to upcoming industry events, mark your calendars for Commercial UAV Expo from September 1st to 3rd, 2026 in Las Vegas. Following that, Taiwan Smart Agri-Week runs from September 8th to 10th in Taiwan, and the Women in Agribusiness Global Summit takes place from September 22nd to 24th in New Orleans. Then we have the Global AgriVet Research Conference from October 7th to 8th in Dubai. Finally, don't miss EMA International in November in Bologna. That wraps up today's episode of AgTech Digest. We explored the latest developments in agricultural technology, from tariffs adding up to 23% to AgTech hardware costs, and creating an early mover advantage for companies that localized manufacturing, and a deeply split earnings season with Corteva and Nutrien moving up, while AGCO fell 18%, to 3 exits that each reflect something different about where the sector is right now. Semios closing a sensor hardware gap with the Pessl acquisition, digital grain going live at scale in Western Australia, and a 180-year UK soil carbon dataset, challenging assumptions that underpin net zero accounting. It's clear that the AgTech sector is making strides in sustainability and innovation, even as the headwinds this season are real. Thanks for joining me. I'm Anna, signing off. Stay inspired and keep pushing the boundaries of what's possible.
$680 million poured into precision ag last year. Autonomous weeding robots dominated, and John Deere made 2 acquisitions in 3 months. A food company, not an equipment maker, bought a robotics startup to protect its own supply chain. The deals are accelerating, the money is moving, and the winners are already separating from the pack. If you're investing, building, or buying in this space, you need the full picture before your competitors get it. The 2025 Precision Agriculture Intelligence Report from iGrowNews is now available. Get your copy today at igrownews.com/precision.